Hi, I'm Richard Murphy, and this is the 8th in the video series on the importance of tax transparency. In this video, I'm going to talk about the reasons why a government taxes. In particular, I'm going to talk about these issues. Why does the government want to tax? Why does it need to tax? Are there any alternatives to tax? And why raising taxes might be better than raising other revenues. Most people think that the reason to tax is obvious. Governments tax, they say, because they need the money raised from taxation to spend. However, this is only partially true in the case of any government. All governments have the choice to fund expenditure by either taxing or borrowing, securing aid or overseas development assistance from foreign governments and institutions, or by creating new government money, which is sometimes called quantitative easing, or on occasion simply money printing, because it can literally mean printing more notes. In addition, in some economies, it can be argued that no government expenditure is funded by taxation. The economies in question only or almost entirely use the currency of the jurisdiction for domestic purposes, have their governments borrow funds in the currency that the government in question creates, have strongly regulated domestic banking systems through which most transactions are recorded, have a low tax gap, and have fairly efficient tax authorities. In these cases, it can be argued that all government spending is funded by money creation by the central bank of the authority, and tax is used to withdraw that money from circulation within the economy. As interesting as that idea is, linking as it does tax and fiscal policy, which explains the relationship between tax and government spending in some Western economies, in this series we'll be addressing the more commonly found situation found in most other countries where money creation plays a minor role in government funding. In most countries, there are 6 reasons to tax: to raise tax revenue, to regulate the money supply of a jurisdiction, to redistribute income and wealth, to reprice goods and services, to reorganize the economy through fiscal policy, to raise democratic representation, because people who pay tax tend to vote. For convenience, all of these happen to have an R in them, which makes them easier to remember. Most of this course is about raising revenue, and most people are familiar with this idea, so I will not spend much more time on it here. But I do think it worth time looking at those other reasons for taxation and why governments might think them important. Regulating the money supply in a jurisdiction is important. It is about controlling inflation. Given that all the currency of a jurisdiction has to be created, if it is legal, by a government or its central bank or the banks that it regulates, the job of controlling inflation always falls to a government. Tax plays a fundamental part in this process. If the government raises more tax, then by and large, that action will reduce inflation. And if it spends more in the currency that it creates than it recovers by way of tax, then that will usually be inflationary. The mechanics are complex, but anyone thinking about tax policy has to remember that tax is not just about revenue raising. Tax plays a big role in the macroeconomic management of any economy. Tax is also used to tackle inequality within many countries. That can be inequality of both income and wealth. If countries think that this issue is important, and not all do, then they can choose to have progressive tax systems, taxes on income derived from wealth and on gains, and even wealth taxes. In many cases, taxes on wealth and income derived from it might not raise much money, but they do exist to support social policies. Critically, in the context of tax transparency, if these issues are considered important, they might require additional or different taxes from those otherwise used, and this can have a big impact on tax system design. These taxes can be used to help create a progressive tax system where the overall rate of tax that a person pays increases as their income does. The next reason to tax is to address market failure. Most economists think there are things called externalities. These are the costs arising to society from the use of some goods that are not reflected in the price those goods sell at. Tax can be used to alter that price. Taxes can be used to increase the prices of, for example, oil, other carbon-based fuels, tobacco, alcohol, and gambling. Tax can also be waived on things the government wants people to be able to afford. These might include things like education, healthcare, food, and water. A policy of this sort can also be used to increase the price of key exports. For example, by imposing tariffs on the export of key commodities or products. This is tax being used as a way of changing market outcomes. The next reason for tax is another economic one. We've already talked about the need to tackle inflation, but linked to that is what is called fiscal policy. Fiscal policy describes the process of managing the difference between a government's income and spending. Part of this can be about encouraging particular parts of the economy. For example, tech or industry or exports, with tax incentives that reduce government revenues but increase growth. Fiscal policy could also be more general. In particular, if government spending is greater than its tax revenues, there is a boost to the economy, with growth following, but with the risk of inflation rising. On the other hand, if government income from taxation is greater than its spending, then the government will be slowing down the economy, but there will be less risk of deflation. This is not precise art, but it can have a big influence on tax policy and the overall trajectory of the economy. Finally, governments may want to tax because they wish to relate to the people that they govern and actively encourage them to engage in the democratic process. There is evidence that people who pay tax are more inclined to vote. People who pay tax might care more. Tax is the consideration in the relationship between people and the government. In fact, tax transparency makes democracy stronger. That makes this course especially relevant.